This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, June 26, 2015. Euro dollar. So right now it looks like the euro could be putting in a medium-term lower top at 1467 ahead of the next major downside extension back towards the recent 2015 and multi-year low from March at 104.62. But at this point, we're going to need to wait for a little more clarity, and a break below recent lows at 1050 will be required to really strengthen this outlook and accelerate declines. Meanwhile, a break back above 1467 would negate and open the door for a more significant correction to the top side in the euro. Sterling dollar. So cable has pulled back off the 2015 high set in recent days at 59.30, though the market is still classified as being constructive while above previous resistance at 155.50. At this point, we're locked in the middle of a range between 59.30 and 155.50, and a break on either end will be required for clearer directional insight. Dollar yen. So dollar yen is in the process of consolidating off that recent multi-year high at 25.85, and there's still risk for deeper setbacks in this market towards previous support turn resistance in the form of the 122, previous resistance turn support in the form of the 122 breakout area from earlier this year. However, with the market still classified in a highly constructive bullish uptrend, any setback should be very well supported in the 122 area ahead of a fresh upside extension back towards and above the multi-year high at 25.85. Euro Swiss. So Euro Swiss continues to look like it wants to be in recovery mode, with a higher low now sought out in the 104 area to be confirmed on a fresh break above recent highs at 105.75. A push back above 105.75 will expose the February peak at 108.15 further up, while only a close back below 104 would delay the recovery's prospect. Aussie dollar. Aussie dollar has been consolidating in recent trade, though the overall downtrend remains firmly intact and deeper setbacks are seen below the 75.33 multi-year low set earlier this year. A break below 75.33 will then expose a fresh downside extension towards psychological barriers at 70 further down. At this point, only a break back above 78.19 would negate or delay the immediate bearish prospect. Dollar CAD. So dollar CAD remains highly constructive and looks to have put in a higher low somewhere around the 21.30 area ahead of what should be the next upside extension. A break above 25.63 will help confirm and strengthen the outlook and expose a retest of the 2015 peak at 28.35 further up. Kiwi dollar. So Kiwi remains locked within an intense downtrend, with the market recently setting fresh 2015 lows this week at 68.15. Any rallies are viewed as corrective, and the market should stall out somewhere ahead of 70 in favor of the next downside extension towards what is now a measured move downside extension objective at 65. Ultimately, only a break back above 72.32 would compromise the immediate bearish outlook. SPX 500. So the S&P 500 continues to show signs of stalling out, with the market once again stalling ahead of that record high from May at 2137. At this point, a break below 2070 will help confirm the topish outlook, while the market still needs to break below critical support at 2040 to really confirm the onset of a major top in the equity market. Gold. So gold is traded back down into some critical internal support at 1170, and the market will now be testing this level to see whether it wants to continue to sort of show signs of a base and break back higher, or if the market's going to close below this critical internal support. A close below 1170 would shift the outlook and put the pressure back on a retest of the 2014 base at 1130 further down, while inability to close below 1170 will keep the basing structure intact and open the door for a fresh upside over the coming sessions back towards recent key resistance at 1232, above which accelerates gains towards 1300 further up.